All right, gang. Good afternoon, and since we're a minute after, I guess I can say that. I appreciate all of you joining us as we're doing our second installment of this stimulus package review. We had great success last week, and we're asked to do this again so other folks could be introduced to us and could review the information, or they potentially missed it. So we're going to jump in again today where we left off and focus on a couple of other things that have come out and some of the best practices and questions that we received after the seminar. So I thought I would start this time and talk a little bit about just who we are as a group. So Diamond Client Group is a boutique financial planning firm that is affiliated with or backed by Mass Mutual. We have a process with our business owners that's really we call it our 4 pillars approach. And Brian, if you don't mind sharing that on the screen, we'll show that real quick to folks. Those 4 areas are tax reduction, so reducing taxes, how we can help you incentivize employees as a business, and so potentially getting away from just the traditional 401k. There's some cheaper ways of doing that. We utilize an area of the tax code, deferred compensation, or 409A. And then the third is leverage, or how you should be structured. And then the last is transition planning. So, how should you sell, whether that's internally or outside to an external buyer, those kinds of things. We help with those different areas. And so as part of this and these planning engagements that we'll have with clients oftentimes, the stimulus just gave us an opportunity to talk about specifically what should we be doing. We're getting that question a lot. So we thought we would put together a resource guide, which if you can pull that up real quick, Brian, we'll just show it. I'm going to walk through this today. So what you're going to receive today, if he pulls it back to the front, we're going to talk about kind of the different phases of the stimulus package, what's important to you as a business owner, what should you be doing. And so we'll walk through phase 1, which really focused on the EIDL loans, or the economic injury disaster loans. Phase 2, which was really focused on sick leave and paid leave. And then phase 3, which ultimately was about the infrastructure, or the Paycheck Protection Program, along with the stimulus checks, and some other bells and whistles that came with that bigger piece that was done. So initially, or just before we get started, I'll make sure that everybody, if you joined this or just now joining us, how this format works. Is we're going to start out with just a presentation component, and I'm going to walk through the document that Brian's kind of scrolling back and forth through, and talk about some key components of the stimulus package. Then we're going to have a good section of question and answer time. At that point, you'll stay muted through the presentation portion, but at that point, we'll turn on the ability to unmute yourself, and we'll give some instructions with where to click to do that, so that you can ask questions, and we'll answer as many of those as we have time for. So last time we had more time than we did questions, which is great. That's the intention of this hour format. I'll talk for the first 20 minutes, 25 minutes or so, leave lots of time for question and answers. And then if we give you back some extra time, we'll do that. If we have more questions than we have time, then we'll include that, as many answers as we can, either privately to folks that ask them, or for the betterment of the group in our follow-up email. You'll receive, as attending today, or actually just for registering for our webinar today, you'll receive this document, which is this resource guide we'll be referring to throughout the presentation. So don't try to feverishly take notes as we're going through the document, because you're going to get a copy. Make it more about any notes that you're taking about the actual conversation, things that we're doing, or the extra kind of little tidbits that maybe I'll talk about on some of these sections that pertain to you. Okay, with that being said, we'll start out again. I'm just going to walk through the different phases of the stimulus package. We'll start with phase one. Phase one was the first bill that was done on March 6th. It really focused on just about 80 billion or so that was put or allocated for businesses to get these true loans or economic injury disaster loan. Those have a true interest rate, a 30-year repayment, and it was about trying to get money out into the community as quickly as possible, but on a loan basis. So, some people took advantage of this. Not that many did. It's one of the smallest portions of the stimulus package. There was a component of this called this advance, this $10,000 advance that you may have heard about. This actually was enacted or signed into law in the phase 3 part of the bill, but we list it here because it has to do with the first $10,000 of the loans that you apply for being a forgiven or a forgivable component, and it's an advance. They just recently, we haven't updated this sheet yet, but the SBA gave additional guidance that they're no longer providing a full $10,000 advance. They're doing it in increments of $1,000 per employee that you have. So to get still with a cap of $10,000. So you have to have 10 employees to get the full $10,000 advance that was put into law. That's really, if you read the letter that came out from the SBA, they're trying to stretch the funds as far as they can and make sure that they help groups with employees. That was the intention more than anything, is the government is trying to make sure people stay employed. So they're trying to be sure that the bulk of the funds are going towards folks with employees. By the way, if you employ yourself, if you're a W-2 within your own organization, you count as your head count, and you would qualify for a forgivable portion of this loan. We'll go ahead and scroll down for now. We might talk again about the EIDLs when we go through like what order should you do things in at this point. But for now, we'll quickly move to phase 2. This is employment leave. So this section's probably talked about the least. I get a lot of questions about this almost as an afterthought. It's got some interesting components to it, though, that people, I don't think, realize exactly how it works or what it means. The intention is that if someone is sick with the virus, if they're caring for somebody who is sick with the virus, or if they were quarantined, for suspicion of those kinds of things, then you get full 100% paid leave for 2 weeks. So that comes in the form of actual cash that's requested from the business owner to the Treasury. So in other words, the business pays this leave for any employee that requests it, and then it's reimbursed through tax credits against payroll tax. If you don't have enough payroll tax obligation that covers the leave that you paid, then you can actually request money from the IRS and the Treasury Department, and they will send you a check for whatever the difference is. So this is really a government-paid program, right? They're paying for the leave. It goes through the conduit of business owners. So that's the first section. The second section of the leave has to do with requested leave, and it actually speaks to one of the reasons being if you have school-aged kids, you're an employee, and you're required to be the primary caregiver for their schooling at home, or, by the way, this also counts for daycare, if the daycare was shut down. That's all of Texas, right now where we've been in stay-at-home orders. So, when someone asks for that leave, again, through the tax credits, it's a lower maximum, around $200 a day instead of, I think it was $550, which says it in the deal for the first section in the document. But we can request for paid leave and get, again, a reimbursement from the government for paying that employee that now has to take care of their kiddos at home. So we'll give an example of this here in a little bit, but that component of just having employees with school-aged children and their ability to request leave and what documentation is needed probably gets overlooked. And that's additional compensation that comes to the business, right, that then flows to your employee pool. So let's go ahead and scroll down a little bit more, Brian. We'll talk about the payroll tax credits on this. You know, you may not realize if you have a service that takes care of this for you, like ADP or some of the big payroll processors, but payroll tax is paid once per quarter. So our first big filing where we pay it in is on the 30th. Up to that point, what ADP and these payroll processors are doing is just kind of escrowing the funds for you and taking it out of every check. And then that way they already have the funds with which to make the payment when the deadline comes on the 30th. Well, since all this is coming as a credit against your payroll tax obligation, you have to talk to your payroll processor for any leave that's being paid. And they've been providing some guidance. You know, one of the best webinars that we've attended was one that ADP actually put on in regards to the stimulus package and the payroll tax credits and what their handling of that is. Some of the payroll processors are doing this in the form of a refund. Some of them are just escrowing the funds for you, keeping it there and paying it on your behalf so you don't have to pay in as much for the next payroll cycle. Now, you have to talk to your payroll processor. Probably depends on how large of a business you are, how many employees, all that kind of good stuff. There's also, well, we'll go ahead and go down to phase 3, because there's a section of phase 3 that has to do with payroll. But phase 3 has several different components. So the first component this is talking about is the actual recovery rebates. You know, many of you that qualify for this are getting your checks this week. I've heard from several people that they just got their checks automatically deposited. So if you make too much money, you don't get these checks. And it talks about the income thresholds, all that stuff here in the document. So that was the first part of phase 3. The second part has to do with unemployment. So it's an additional $600 federally that's placed on top of state unemployment. For most states, that actually puts the dollars per hour earned above $20 an hour, which it was one of the more debated parts of the package that went into place. Because for some companies, your employees are actually better off if you fire them because of the amount of unemployment that they can receive during this time. But then, and I had some questions from some companies initially that we worked with saying, hey, should I, if I really care for my employees, should I go ahead and fire them? But most of the other parts of the stimulus package for businesses are incentivizing you keeping them employed, like the Paycheck Protection Program. So it offsets some of those unemployment. But do know, that if you are unemployed, and that includes if you're self-employed, and you are now unemployed because of the virus, you can receive compensation through this $600 per week credit through unemployment office. So you may be asking, well, self-employed, do I also get state unemployment? If you haven't been paying in to the unemployment system, you don't receive unemployment from the state of Texas, but you'll still qualify for those $600 a week federally, and that's paid through the unemployment system. We've got a link there that kind of talks about that if that's of interest to any of you out there. The next part is where we get the vast majority of questions, which is all the different assistant packages for small business. And the first thing I always like pointing out is this is actually a choice. Most of the information out there doesn't make it, that people don't realize that it's a choice, but you have a choice between doing the Paycheck Protection Program or the ERC program, which is listed right underneath it, the Employee Retention Credit. The second one comes in the form of a payroll tax credit. So depending on your employee pool and how your business was affected, you may actually want to run the calculation on which one would benefit you more, right? So for the Paycheck Protection Program, this is an 8-week loan that is forgivable, right? On the PPP loans. So if I look at my 8 weeks of payroll, along with some of the other things that it covers, which is rent, but it's 250% of my average month is the amount that will be forgiven, or the total amount that I could receive. Whereas the ERC, goes through the end of the year, and it's a 50% credit against payroll tax. The way you continue to qualify for that is on a quarter-by-quarter basis on whether or not your revenues get back to 80% of what they were in the quarter last year. So you look quarter by quarter, okay, we're in the second quarter now. What did I do in revenues last year? What am I doing this year? You probably easily meet the test. Do I anticipate next quarter still being below 80%? And do I then anticipate in the fourth quarter still being below 80%? If I do, if I'm in a type of industry that's going to be affected on an ongoing basis because of this, even if the stay-at-home orders are lifted and we try to get back to business as usual, and there's some industries where I can see that with, you may want to run that calculation because it would be 50% of all wages paid completely forgiven through the end of the year rather than the total wages being forgiven over just this 8 to 10 week period, or 10-week calculation, but paid out over an 8-week period. So that's the choice there. It's one or the other. If you'll scroll down real quick, Brian, we'll actually show that chart. We'll go all the way to the chart and show this. There's actually, this is a chart put out by ADP, and I liked it enough so that we included it here. Give them credit for it. So this quickly just talks about if you do, depending on which program or section of the code or the law that was passed that I'm utilizing, what else do I qualify for, right? So for sick leave, I can use sick leave, and then I just can't use the same wages for any of the other calculations or any of the other dollars, right? If I do the Paycheck Protection Program, then I cannot use ERC. I also cannot get the deferment of the employer Social Security tax. So you may have heard, and it was the third kind of section of this in the document, that your portion as a business owner of the employment taxes do not have to be paid for the remainder of this year, and you split it in half. You don't have to pay it until the end of 2021 and then the end of 2022, 50% payments of what this year's employment tax should have been. Well, that's only if you don't do the Paycheck Protection Program. You can't do both. So most people have kind of missed that, and they're thinking, well, I don't have to do any employment taxes on the 30th of this month. That's not true if you're doing the Paycheck Protection Program. It's one or the other. So really important that everybody doesn't miss that. And this chart kind of outlines that on if you do them, which ones can you still do. So let's scroll back up, Brian, and talk a little bit more detail about the Paycheck Protection Program. So with this, again, there's some great resources here that we put some links to. The Treasury Department actually continues to come out with additional guidance. And so we've linked to those guidance, the original fact questions, FAQs that they provided for clarity and how the program works as they apply it. And then the additional guidance for how you calculate special situations is what I'll refer to them as. Best example I can give is the original bill didn't give a lot of guidance on PEOs or shared services. So I have a company, my employees are actually with a larger organization, and so they're held there. They issue the W-2s, but I'm responsible for their payroll. Who actually applies then for the Paycheck Protection Program? Well, the Treasury Department has given guidance. That's me in this example. I would apply for the Paycheck Protection Program. I need a receipt from the larger organization, either in the form of payroll tax forms or the 940. When you have a true PEO that allocates their portion of payroll to their clients, they'll issue a 941 or a schedule to those individual employers. So I can use that documentation if I get it. If the organization I share the services with do not issue a 941, I can get them to issue me a receipt, and that also qualifies when I apply for the loan. So there's some unique situations like the PEOs that are outlined in those frequently asked questions that the Treasury Department has released, and they've continued to update those. So we updated this sheet when they did this. I think the 7th was the first time they issued additional guidance. They immediately the next day came out with a revised version of those, and they've continued to do so since. So I would just check that, especially if you are in any kind of an interesting situation with how your payroll is calculated. It's good to just read through it real quick. They're pretty limited in numbers, and you can kind of go through them and see the different questions that were asked and what the answers are. That said, the application of the PPP is fully through local banks. That is, there's some good parts of that, because that was done so that they could get the money out quicker. It's also, causes some problems, because even though the Treasury Department may say that, as an example, you have two ways to calculate your average payroll. One is by going through all of 2019 and doing the average. The alternative is to do the last 12 months. But some banks on their application just ask for the 2019 data. They don't ask for the second option, which is the previous 12 months. So you have to just understand that banks are doing the best they can. They all have some different questions on those applications, and you either have to work directly with the bank, or some of the best practices we've been hearing is that you can apply through a couple of different banks, and then it's whoever gives it to you first. We probably will get some questions on that with just who you're going through, because some of the banks are getting tapped out, all that kind of good stuff. This program is on a first come, first served basis. You are not really safe with the money allocated to you until you get a number that is an SBA number. So that doesn't mean it's your reference number with the bank. You have to be given a final email or documentation from the bank stating that you've been assigned a number with the SBA, meaning that the funds are allocated in your company's name. Even if they haven't given you final approval yet, what's important is that the funds are allocated in your name that's requested, even if they're still underwriting. So we'll probably save the rest of that until we open it up for questions. I'll briefly just kind of mention the student loan repayment benefit. That's for businesses. If you have some programs for that, they're covering that through the business for your employees. Really, it needed to already be in place, prior to the bill. And then we'll kind of keep scrolling up. There's a couple of other additional sections that I'll at least quickly gloss over. Keep going. I'm sorry, I guess down, Brian. Keep scrolling further into the document. Thank you. All right, so our company has two locations, one of which is in Harris County here in Houston, and there's a specific program here that I mentioned. I know some of you are joining us from other states, and it's important. I still think it's a great example what we have from some of the counties here in Texas for your states for you to know to look into. There are some county programs that are doing their own forgivable loan programs. So as an example, here in Harris County in the Houston Metroplex, there's a $25,000 loan that is forgivable, available to small businesses that meet the criteria. It's meant for companies that are not considered essential. So you're not essential, and it's really meant for, they were forced to close, so they even give examples on their website of restaurants, salons, nail salons, all those kinds of good things from an eligibility standpoint, and how the forgiveness will work over the next, I believe it's a 5-year window. So we include Harris County specifically in our document, as we have a ton of clients that are directly affected in that local environment. But it's good to point out that wherever you operate as a business, you should check into the county operations, see if there's any local programs that are available to you as a business owner. All right, is there anything else, Brian? I think we have retirement programs is the last one. Yeah, there we go. So we'll end here, and then I'll open it up for questions. So there's some unique retirement plan benefits that affect all of us as individuals, but it's good to think of it in a business concept as well. You have this temporary kind of waiver through the end of 2020 of the 10% penalty that would occur for accessing funds when you're younger than 59 and a half. they waive that penalty up to $100,000 for access to your retirement account. So I can effectively grab those funds and either pay just the tax on those funds. At the end of the year, when I file my tax returns next year for 2020, I pay the tax on that, but not the penalty. Or I have the option of repaying the funds in the form of a loan, considering a loan, that $100,000. And I believe we've got 2 years with which to repay it. That's a pretty cool benefit. Only issue there, is if you were heavily invested in the market within that retirement account. Do understand I'm not advocating for you immediately liquidating that, as you're selling, then liquidating funds that are at a down marker. Some retirement accounts or programs do have the ability to issue a loan against that as collateral. So you should reach out to your plan sponsors and or TPAs and groups that you have the plans with, and see if they have an actual loan program for this $100,000 instead of having to liquidate, as some may. And a lot of them do, because employees are allowed to take a $50,000 loan against their retirement accounts in normal times. And there's repayment terms with that. This is giving the ability to treat it up to $100,000 instead, and so that's unique during this period. You also have this temporary waiver of RMDs. Why is that important? Well, it's especially important, required minimum distributions for people who are retired. I don't really want to be forced to take money out right now while the market's down. Well, you don't have to. So if you don't need the money for living expenses, that's a nice additional benefit, is that we don't have to take the RMDs in 2020. I think that's the end of the document. Is there anything I missed, Brian? No, there's just some additional resources we provided kind of at the end from some of the different government websites that do some good job of giving a broad overview. U.S. Chamber of Commerce, which is the national kind of governing organization for a lot of your local Chamber of Commerce. They provide some really good resources within their site specific to business owners. So we list a lot of those that kind of down at the bottom. Before I open it up for questions, the last thing I'll do is I'll talk about, okay, what should I be doing, Luke? You've mentioned some of these programs. What should I focus on first? For most people, when you do the analysis between the ERC and the PPP program, the PPP does work out to be more money, and it's more money immediately as opposed to waiting for the tax credit. So a lot of business owners are utilizing or applying for the PPP program. If you're doing that, understand that this is a defined amount and it's on a first come, first served basis. Every bank's application that I've seen so far has that disclaimer at the very beginning that they aren't guaranteeing that just when that as they take applications that the money will be there. It's only once you get that number with the SBA. And so there's 350 billion. We're already over the 200 billion mark. I think we've surpassed 250 on the last we checked. Closing in on that number. They've talked about providing an additional 250 billion of stimulus money to this program. The president has asked Congress to do that. It's being debated on if they're going to put some additional kind of strings attached to that program. So my advice to all of our business owner clients is to get in line as quickly as you can if you're debating this. There may be some question that you had, or you're trying to file your 2019 taxes first, because that would help you on the calculation, something like that. Maybe getting a little bit bigger number on that was good guidance when this was initially coming out, but the worry now is that the funds are going to run out. So it may be better to apply. That's something that you should talk to your tax advisor with, or your CPA, and kind of make that decision on, hey, how big of a difference is it, and where am I potentially in line? What am I risking? And what's the chance that, hey, we wait and get the calculation right because we think they're going to give us another 250 billion, so we'll get there eventually anyway. Just know those risks, make that decision on your own. But it's one that a lot of discussion is being had around right now, is just are the funds going to run out well before people, everyone who needs it utilizes it. All right, so I think that's the last point that I'll make from a presentation standpoint. Brian has kind of the instructions on there. He's going to allow you guys to unmute yourself at this point, and we'll start with questions. And by the way, if you've joined by phone, you have to choose *6 to unmute yourself or to mute yourself. Otherwise, if you're on the computer, you can actually hit the microphone at the bottom left, and that will unmute you so that you can speak and ask a question.
So I have a quick question. If you qualify and get a PPP loan, what kind of documentation is required after the fact for loan forgiveness? Is there any guidelines on that?
Not exactly. They've given some guidance as to what you have to do. So let's talk about that real quick. There's two components for loan forgiveness. The first is that of the funds that you receive, 75% needs to be used for payroll. Now, how you prove that, there's some guessing that's happening, but the real answer is they haven't provided exact guidance around what documentation they're going to request after June 30th for loan forgiveness. The second component, so the first is this 75% of the funds is for payroll of the total. That means 25% can be paid towards rent and the other things that were mentioned. So rent, utilities, interest on debt, not principal of debt, but interest. This can be used for, and benefits. So on the other side, it's a head count threshold. And that one gets interesting because the way it reads is that it's purely how many people did I have on February 15th? How many people do I have on June 30th? If that number is the same, head count, then I'm good. So the questions that are being posed is, well, does that mean I had some people that were making $100,000 leave me, and I rehired some people at the bottom end of my payroll that make $15 an hour? Does that still mean that, if my number was 10 on February 15th and my number's 10 on June 30th, am I good, even though the total payroll is different? And the answer seems to be yes, but we haven't gotten exact guidance on if they're going to change that. The way it is written for what we have information on right now, it just states that it's a headcount issue. There's CPA groups, podcasts, things that I've heard, where I've got business owners that are making the decision to, hire a spouse as a W-2 employee that does legitimately do things for the business, and they've always just been compensated from distributions. Well, now they're going to be compensated as a W-2 to increase headcount. From what we can tell, there's nothing that precludes you from doing that. Again, that's something you may want to talk to your CPA or a tax advisor specifically around if they have any other opinions around that. But from everything we can tell, exact guidance has not been provided. But there are those two components, 75% towards payroll and headcount. A question that I'll get a lot of times is, hey, Luke, I don't really have enough for these people to do. The government doesn't understand my business. I don't see why I should retain them. Keep in mind that you're getting a multiplier of 250%. What the government's intention here is to use businesses as a conduit to keep people employed, right? So that, strain isn't on any one piece of their programs, right? So the unemployment is one program that can get money out into the community. This paycheck protection program is just another conduit through businesses to get money out into the community. And then the other is the checks that they've just started issuing. So they're giving you an incentive because you have to pay them for 8 weeks, right? So the incentive is that extra 50% because 200% of your average monthly payroll would cover the 8 weeks. So they're giving you this extra 50% incentive that you keep everyone employed, even if you don't have that much for them to do, that you can apply towards rent and other aspects of your business that are allowed if you'll keep them employed. So if you downgrade too much of your payroll, forget the headcount issue. You might solve the headcount problem with some of those ways that we talked about, but you still have to spend 75% of the total on payroll, and that's hard to do if you replace too many people making $100,000 with $15 an hour folks. So just keep that in mind and food for thought. And it's hard to hire some people making a low amount as well, because remember, on unemployment, they're making $20+ an hour anyway. So it's not easy to replace your headcount necessarily right now. Great question, by the way.
So along those lines, if your headcount, say, is 50, and you have 3 or 4 people that leave because they just are afraid to come back to work, or they've got a different job, and your headcount drops to 48 at the end of 8 weeks, what does that impact does it have on your payback ratio or forgiveness ratio?
So there's in the document that we provided, the Treasury Department gives you what those calculations are for the reduction. But in general, and I think you actually can do up to 90%. So like in your example, if you went from 50 down to 48, I believe you're still meeting the testing for not being considered to have a headcount reduction. But rather than hire those exact people back, you can hire other folks because it's just total headcount. So that's something to look at, that calculation, make sure that you're hitting it. And maybe Brian will bring that up and go through it, or I'll do that in the background while we answer any other questions just to make sure. But I believe it's 90%. I'm just doing that from memory at the moment. And if you're sharing that, Brian, you'll have to pull it from the Treasury Department and make sure you find it, and then maybe we'll pull that up and share that actual calculation on the reduction. I believe it's in the second document from the Treasury Department. Oh, he's sharing it, so maybe he already found it. Do you have the reduction? While Brian's looking for that, what other questions do we have? And we'll find that exact answer on the reduction calculation. So by the way, if you already let some people go and you're wanting to come back into the good graces, you can kind of see there under rehiring, you can bring them back on before April 26th, and you're not penalized for the terminations that you had. Hey, Brian, while you're searching for it, why don't you not stop sharing, and then just once you find that item on how the calculation has, and I think it's in the second document from the Treasury Department, we can share it. What other questions do y'all have? I know y'all have some. This is your chance. Who out there has already applied, and what have you experienced in terms of information coming back from your bank? Because I like hearing that and sharing it with everybody who they're having some good results with. As some of our clients are starting to have trouble getting the loans processed through specific banks.
So I was reached out to by 3 different banks, and I went with my incumbent bank, Frost, and I had paperwork to them the Thursday night before they started accepting applications, and then did 3 modifications through that Tuesday. And I now have a SBA loan number that says it's been funded but unallocated or undistributed or something. So I'm supposed to get a promissory note on Friday with funding. So we'll see.
Gotcha. Very good. So you got to the important stage, which is having that SBA number, right? And then the documentation comes after that. We've had a few people that are already been funded, mostly through either Chase has already funded some loans, but the rest of them are mostly through regional banks that have already been funded. Is from what I've heard. So if anybody's, Wells Fargo had all sorts of problems, mainly because of the financial crisis limit that was placed on them for SBA loans. I heard that this last week they actually got that lifted. They still seem to where they could do more than the original, because they hit their threshold very quickly, and that was because of the limit that was placed on them federally for any SBA loan program. So it looks like they have not. I guess the way to put it is they haven't processed a lot of these loans. They haven't really been kind of going after them. It's more of your small regional banks and community banks that are really trying to get a lot of these loans as much as they can. It's allocated to them. But it comes down from SBA, and they get a certain allocation for an amount. And then after they hit that threshold, they have to request more. But that's this constant game that's being played of getting the $350 billion fully allocated across the country as much as possible.
Hey, Luke, can you hear me?
Yeah.
Yeah. So Wells Fargo, it sounds like, they're not even really honestly taking applications, is what I've heard from numerous sources. They're almost looking at it as something they just don't even want to do for the headache purpose. I've heard from a lot of people, the regional banks, like you just said, are the places to go. Frost was just mentioned. I've heard some good things about Frost, Texas State Bank, Gulf Coast Bank. A lot of the small regionals here in Houston are accepting applications, and I think even Gulf. Let me make sure I got the name right. Gulf Capital Bank. I'm sorry. They mentioned that one on a webinar earlier in the week, that you didn't even have to be a customer of the bank to apply there. So I've been sort of looking at some different regional banks to apply through. A couple of them do. They're basically giving their customers to like the end of the week to get in the queue, and then they're going to open it up to non-customers next week. I've heard that from 2 different banks. So that's just some things through the rumor mill that I'm hearing out there for some of the regionals and some of the bigger banks.
Sure. Thanks for sharing that. Anybody else have a question? Well, it looks like Brian wasn't able to immediately find that resource for the loan forgiveness. I know I've seen it, so we'll get that out to you guys in our follow-up email. And actually, you might who asked the question? And Brian, why don't we write down their name and make sure we got their email address so that we can get that. I think we have it from registration, but we'll get them the follow up with them directly on getting that answer to them.
Yeah, I believe the person's name is Rob Vaughn. That's how it's showing on my computer. So I'll send that there. The problem is the link that used to have that information is now a broken link from the Treasury Department. So I guess they've made some kind of update, and the link that we have on our resource guide is not working.
Okay, we'll fix that as well before we send it back out with whatever the updated link is. All right, any last questions? Anybody else want to ask something before we let it go and stop today? Well, guys, I appreciate so much just you joining us for today, and I hope this was impactful to you, and you heard some best practices and resources for what we're doing. I will let you know that, again, our goal is to help, small businesses in our community, whether that's in times like this and, just help you figure out what in the world, what resources are available to you, or how to attack the taxes that you paid, or incentivizing employees, how you should be structured, all those kinds of good things, or just some basic good financial planning. And that's our goal at Diamond Client Group, is to help you. What you're going to receive from us in terms of next steps is a recording of today's webinar and the information that we provided, along with that resource guide, which we'll update when we send out. And then we have additional webinar this coming Friday at 4:30. So if there's anybody else, any other business owners that that would benefit from this kind of a discussion and the ability to ask some questions, please feel free to share this with them. At the bottom of the email that you'll receive as a follow-up to today's meeting, we'll also have direct links to all of our team, so you can book meetings directly with them. I think Brian put up my direct information there just for you to see if you have some questions, and we're happy to be sure and get you some direct answers. As always, during this crazy time, be sure and stay safe, stay healthy, and I appreciate you joining us again. We'll see you next time. Thanks.